Hello dear CMA aspirants from South India. As you all already know, Akash Agarwal classes has launched for you all 100% English lectures in English for CMA Foundation students giving their examination in December 2025 and onwards. So here I am going to tell you how do you enroll in the batch. You just have to join our WhatsApp community which is given in the link. Fill up the Google form again given in the link and do download our mobile application Akash Agarwal classes to access the notes. You all know the lectures which we are going to conduct will be 100% covered. There would be no subject which we are not taking care of. So we are going to take care of each and every subject, each and every concept. We are going to take MCQs for you. We are going to provide test papers. We are going to take live mentee sessions as well. Lectures which we are going to take for you all are 100% recorded lectures and not dubbed lectures. And you all know we have exclusive team ready for you all to teach you for your CMA Foundation December 2025 attempt for subject wise as well. And we are uploading the lectures on a weekly basis. All the important links which will be useful to you all are uploaded in the description box. Since we have many students who have cleared CMA examination at all the levels from Akash Agarwal classes, and to reciprocate the love which we have received from South Indian students, we are here for you all taking lectures 100% in English, so that we can clear your CMA Foundation December 25 attempt together. So keep studying, do watch all the lectures till the end, and do show some love by liking the video, subscribing to the channel, and putting up a word in the comment box. Keep studying. Bye-bye.
My dear CMA Foundation as well as CMA Intermediate students, in the today's session, I will be covering the topic known as Final Accounts for Sole Proprietor. This chapter is very important from the point of view of foundation as well as intermediate. So students, do not miss this chapter. It will be covering a very good weightage in your exam, and it will be helping you to score good marks in your accounts paper. So final accounts for sole proprietorship is in foundation as well as in intermediate. So sole proprietorship, you have to make the final accounts of sole proprietorship, not a company, not a partnership. Partnership final accounts are different. Company final accounts are different. You have to hardcore maintain the books of accounts of a sole proprietor. Sir, first of all, we do not know that sole proprietorship means what? Sole proprietorship means a single person is the owner. He is conducting the business, he is managing the business, and he is responsible for all the profit and losses. It is known as sole proprietorship business. In sole proprietorship, there are two types of entity. The first one is manufacturing entity, and second one is non-manufacturing entity. Very important. Manufacturing entity is prepared by the manufacturer, and non-manufacturing entity is prepared by the retailer. Who is the manufacturer, sir, and who is the retailer? The very important point. Manufacturer means a person who manufactures the goods, who make the goods, who do the production of the goods. For example, I am making this calculator and selling the goods. So I am a manufacturer. I am bringing this calculator from the market, from the wholesaler, and I am selling it. It will be becoming a non-manufacturing entity or a retailer. So there are first of all two entities. First one is manufacturing entity and second one is non-manufacturing entity. All the foundation as well as intermediate students, especially foundation and intermediate students, the most important thing, I will be covering the MCQs also. It will be also helping to the intermediate student. We know that intermediate paper is descriptive plus practical plus theoretical, but in that also MCQs also are coming. So I will be covering each and every point. So do not miss a single part of the lecture. Do watch it. Let's go ahead. Just give me a second. Yes. Manufacturing entity prepare four accounts. The first account which is prepared by the manufacturing entity is the manufacturing account. In manufacturing account, we will be finding out cost of goods sold. Second account is trading account, gross profit or gross loss. Sir, we don't know what is gross profit. We don't know what is gross loss. Do not worry. I will be telling you what is gross profit, what is gross loss. Profit and loss account, net profit or net loss, and balance sheet. So manufacturing account prepare four accounts. Sir, can you please explain in detail what are these four accounts? First of all, manufacturing account will be helping you to find out the cost of goods sold. So what do you mean by cost of goods sold? For example, I am selling a product for 120. I am selling a product for 120. So I should know that what is the cost of production of this good. For example, I am incurring a cost of 100. So I am selling the goods of 100 at 120. So 20 is my profit. So this 100 is nothing. It is cost of goods sold. Or we can tell it as cost of production. Manufacturing account will be helping us to find out the cost of goods sold. I have also prepared a format of manufacturing account which will be showing you in some time. Manufacturing account, and second one is trading, that is trading account will be helping us to find out the gross profit or gross loss. So what do you mean by gross profit, what do you mean by gross loss? Gross profit and gross loss, for example, I will be giving you a simple example. It will be bringing you more clarity. Just a second. Very important. If I purchase a product, yes, the important point, what is gross profit, sir? For example, if I purchase a product for 100 rupees and I sell the product at 120, so I've earned the profit. For example, I have purchased the product from the market at 100 rupees, or my cost of production is 100 rupees, and I sell the product at 120 rupees. So the 20 rupees difference is my profit. 20 rupees difference is my what? Profit. Now, second important thing, the most important thing, can this profit I can take it at my home, or at this time the 20 rupees profit which I have earned from the business, it is my net profit? No, there is a difference between gross profit and net profit. The major difference between the gross profit and net profit is that this profit is derived only after direct expense, that is purchase, sales, and the expenses which are required for purchasing the goods. For example, wages, for example, carriage, for example, transportation. Only these expenses are being included. So 20 rupees profit is my gross profit. But my all indirect expenses like salary, rent, electricity, all the expenses which are required to run the business are 15 rupees. So this 15 rupees are my indirect expenses. So I have purchased the goods for 100 and I have sold the goods for 120. So 20 rupees profit is my gross profit. But after deducting my indirect expenses, that is 15 rupees, I will be getting a profit of 5 rupees. That profit is known as net profit. That profit I can take at my home. I can withdraw it from the business. It is known as net profit. It is known as net profit. Similarly, if you sell the goods below the purchase price, it will be gross loss. It might so happen in many cases a business organization has a gross loss, but at the end it will be having a net profit because of indirect income. Because of which income? Indirect income. In business, there are also some indirect income. Come over here. Trading account will be helping us to find out the gross profit or gross loss. P&L will be helping out to find out the net profit or net loss. I have already explained what is net profit and what is net loss. Balance sheet is a statement. First of all, very important point. Balance sheet is not an account. Balance sheet is a statement which shows the financial position of the business. which shows the financial position of the business. So manufacturing entity which has been preparing four accounts. First one manufacturing account, second one trading account, third one profit and loss account, and fourth one balance sheet. Non-manufacturing entity is prepared by the retailer. Very important. Non-manufacturing entity is prepared by the retailer. He will be preparing only three accounts. In that, two will be account and one will be statement, trading P&L, trading account, P&L account, as well as balance sheet. Same trading account, gross profit or gross loss, P&L, net profit or net loss, and balance sheet for financial position. So there are two types of entity: manufacturing entity and non-manufacturing entity. The accounts will give you the word. Trading profit and loss account will be helping us to know the financial performance. Very important. Trading profit and loss account will be helping us to find out the financial performance. That is what the business enterprise has earned profit or it has incurred losses. Balance sheet will be helping to find out the financial position. Come over here. I have given the definition of all the account. It is an account which is prepared by a merchandising concern which purchase goods and sell the goods same during a particular period. It means that trading account, in trading account we will be recording direct expenses. The purpose is to find out the gross profit or gross loss, which is an important indicator of business efficiency. It can come for the MCQ. Dash is an important indicator for business efficiency, gross profit or gross loss or trading account, and it covers direct expenses and revenue from operation. Sir, what do you mean by revenue from operation? Revenue from operation means that the main source of income of the business, that is sales, it is known as revenue from operation. Sir, what do you mean by direct expenses? The expenses which are directly related to the business, for example, purchase of goods, transportation expense. These all are directly related to the what? Goods. So first of all is the trading account. It is a account which is prepared by a merchandising concern which purchases goods and sell the goods same during the period. The purpose is to find out what gross profit and gross loss. It covers all direct expenses and revenue from operations. I will be also explaining the format. First of all, get the information about trading account, P&L and balance sheet. P&L. The statement is related to a complete accounting period. It shows the outcome of business activity during that period in a summarized form. So which account will be giving us the outcome of the business activity for a particular period in a summarized form? Profit and loss account. By profit and loss account we can find out our net profit or net loss in the business. Covers indirect expenses, losses and other revenues. All the other revenues except for sales. Only sales will be revenue from operations. Other income will be covered in P&L. For example, rent received, discount received, commission received, dividend received, interest received. All these are treated as indirect incomes, and all the expenses like salary, rent, electricity, printing, stationery, all these expenses will be covered in P&L. So after noting these expenses and income, we can find out the net profit or net loss of a business enterprise. It might so happen above it can be gross profit and below it can be net loss. Why so? Because sometimes what happen in a business enterprise, the expenses are greater than the incomes. Means that the indirect expenses are greater and the income is less. So it will be resulting in net loss. Balance sheet, I have already explained that balance sheet will be showing two things, that is assets and liabilities, and we all know that assets refers to what? Applications of fund, and liability refers to what? Sources of fund. The balance sheet shows the list of resources and funding of resources, that is assets, and liabilities towards owner and outsiders. it is also referred as sources of funds, that is liabilities and capital, and applications of fund, that is asset. Already we have discussed this point that balance sheet will be showing two things, that is assets and liabilities. It will be telling us the financial position of the business. Sources of funds refer to what? Liabilities and capital, and applications of fund refer to what? Asset. Let's go ahead. Note, very important. Direct expenses mean all expenses that incurs to make the goods available for sale. Example, purchase, wages, carriage inward, factory expenses. All this will be treated as direct expenses, and rest all expenses are indirect expenses like salary, advertisement, discount. All this will be indirect expenses. Direct expenses mean all expenses that are incurred to make goods available for sale. Revenue from operations mean sale of goods, and other revenue are what? Interest, commission, dividend, etc. etc. Just give me a second. Let's go ahead. We will be now discussing the format of our manufacturing account, trading account, and P&L account. First of all, in manufacturing account, it is prepared for a particular year. That's why the heading of the year account is what? Manufacturing account for the year ended. First of all, you have to write to opening stock WIP. WIP means work in progress. It might also happen in a manufacturing entity. There are goods which are in process, which are not yet completed at the year end. It will be treated as closing WIP, and the next year it will be treated as opening WIP. It means that work is in progress, the goods are not totally completed, raw material is converted, the process has been started, but it is not ready for sale. Raw material consumed, very important point which you have to not miss, that is opening stock plus purchase minus closing stock. It is the formula of consumption. To find out consumption, what formula we can use? Opening stock plus purchase minus closing stock. It means that 100 quantity was my opening stock, 1000 was my purchase, so it will be how much? 1100. It will be how much? 1100. So out of 1100 I have left with 200 stock. So how much is my consumption? 900. That we can find out with this formula. To raw material consumed, opening plus purchase minus closing. Direct wages, direct expenses, factory expenses. Direct wages, it means that the wages which are related to the production process. Direct expenses, factory expenses. Over here, sale of scrap. Many times what happen in a manufacturing company, when you produce some goods, you will be also receiving some byproduct. So you will be selling that byproduct, or you will be selling the scrap, and you will be getting money from that. Sale of scrap will be deduct from the cost of goods manufactured. And over your last point, closing stock of WIP, the goods which are in process, which are not yet completed at the year end, it is known as closing WIP. So the format of manufacturing account is very simple. Opening stock of WIP, raw material consumed, direct expenses related to the production, sale of scrap, and closing WIP. You will be getting balancing figure, cost of goods manufactured. It means that the amount which is required to manufacture goods, you will be getting as a which figure? Balancing figure in the manufacturing account. So here we are done with the first format of manufacturing account. The second format is of what? Trading account. Let's go ahead. Trading account format is very simple. It is also coming in the exam, so you must focus on this point. Again, important thing, trading account is also prepared for the year and not for a particular date. Trading account is prepared for a particular year and not for a particular date. particulars. First, we have to write opening stock. The closing stock of previous year will be opening stock of current year. Sir, why do we record closing stock? Due to matching principle. In sometimes when we will be discussing the adjustment, I will be telling you that point. Opening stock, then we have what? Purchases. And after the purchases, any there are purchase return, we have to deduct that purchase return. Direct expenses like carriage, wages, transportation, all expenses will be covered over here. Then here will be coming sales minus what? Sales return. It might so happen in a business enterprise. There are some there are some goods which you have sold, but the customer did not like it. They have returned us by goods sent on consignment. You have sent the goods to the consignee for the purpose of sales. By goods withdrawn by the owner for personal use, it will be treated as a drawing. You have two options. Either you can minus it from its purchase, or you can show it on the which side, credit side. By goods distributed as free sample, it is a type of advertisement. It is a type of what? Advertisement. Whenever the goods are distributed as free sample, it is a type of advertisement. It means that I have distributed some goods as a free sample. So it will be having two effects. First effect will be trading account credit side, and second it will be treated as an advertisement profit and loss debit side. Goods gave as a charity, goods lost, all this will be written on the what? Credit side of the trading account. Whenever the goods goes out from the business, it will be recorded on the credit side. On the which side? Credit side of the trading account. At the end, you will be writing which stock? Closing stock. Closing stock means what? The stock which is remaining at the end of the year, which is not yet sold. And we record closing stock due to matching principle to find out the correct profit or loss of the business enterprise. Very important. If we do not record closing stock, we will be not getting the correct profit of the business. It will be always incorrect profit of the business enterprise. So closing stock, it will be either given in trial balance or either given in adjustment. We will be discussing where and how the treatment should be made. Let's go ahead. So it will be finding out the gross profit or gross loss. You will be finding out the gross profit or gross loss as a which figure? Balancing figure. If the direct incomes are greater and expenses are less, you will be having which profit? Gross profit. But if expenses are greater and incomes are less, you will be having gross loss. So here we have done with one more format of trading account. Let's go ahead. The next one is profit and loss account. The next one is what? Profit and loss account. So profit and loss account, first of all, the profit you have earned in the trading account, you have to transfer that profit in this account. If you have earned profit, if you have incurred losses, for example, here by gross profit or to gross loss, by gross profit or to gross loss. And students, one more important thing, in the description box we have given a WhatsApp community link. If you have not yet joined the group, kindly join the WhatsApp community for more updates regarding your CMA foundation as well as intermediate exams. Let's go ahead. Here on the credit side will be all indirect income, right? Example, interest received, commission received, profit on sale of asset, dividend received, rent received, all it will be treated as an indirect expenses. Then over here, admin expenses, depreciation, indirect expenses, selling and distribution expenses, advertising, financial expenses, loss on sale of asset. All the indirect expenses will be covered over here, and all the indirect income will be covered over here. And we will be finding out the balancing figure as a net profit or a net loss. If the income is greater and expense is less, it will be net profit. And if expense is greater and income is less, it will be what? Net loss. and this net profit and net loss will be transferred to the balance sheet capital account. If there is a profit, we have to add it in the capital. If there is a net loss, we have to deduct it from the capital. Very important thing. Note, all items of trial balance should be posted at one side, that is debit or credit, as journal entries for this have already been passed. It means that the items which are appearing in the trial balance will be having only and only one effect. It will be never having two effect. Effect of adjustment entry should be posted to the both side, debit and credit. If there is an adjustment entry, or if it is an adjustment in the final accounts, you have to post it in the two sides. It will be having two effects. In short, the items of trial balance will having one effect. The items of adjustment will having two effects. Items of trial balance will having one effect. Items of adjustment will having how many effects? Two effects. Now, adjustment entries. First of all, we have to deduct purchase from purchase return. So here, purchase return account debit to purchase. First of all, because purchase is an expense and expense at which balance? Debit balance. For decreasing that balance, we have to what? Do credit to the purchase account. So we will be debiting purchase return account. So what is the entry? Purchase return account debit to purchase. Similarly, in case of sales, sales have credit balance. For decreasing sales, you have to debit the account. Sales account debit to sales return. And after that, in case of expenses, if there are outstanding expenses, if there are prepaid expenses, if there are outstanding income, I will be explaining all these points. First of all, lesson one important thing. What do you mean by outstanding expenses? What do you mean by outstanding income? Outstanding expenses, outstanding income, prepaid expenses, pre-received income. There are four important things. I have prepared a special chart for all these four. Come over here. I have prepared a chart known as Lal chart. So outstanding expenses will be having two effects. First of all, it refers to the expense which has been incurred but not yet paid. The expenses of current year which you have to pay to add in the respective expense, and it will be appearing as a liability. So what entry you will be passing? Expense will be increasing, expense will have debit balance, expense account debit. Second important thing, liability will be also increasing, expense account debit to what? Outstanding expenses. The first entry, expense account debit to what? Outstanding expenses, because outstanding expenses is a liability. Prepaid expenses, first of all, come with outstanding income, then I will be telling about prepaid expenses. First, finish both outstanding, then finish both prepaid. Outstanding income refers to what? Income is of which year? Current year, which is earned, but it is not yet received. So income will be having credit balance. We have to increase the income. So income will be crediting. And which account will be debiting? Debit will be the account of what? Outstanding income. So entry will be what? Outstanding income account debit, because it is considered as an asset. So income, we will be adding the amount in the income. The entry will be what? Very simple. Outstanding income account debit to what? Income. Similarly, prepaid expense, expenses of which year? Expenses of next year. Expenses of which year? Next year. So over here, what we can do? Expenses of next year, which we have paid in current year. So we have to deduct it from the expense. Expense have debit balance. For decreasing the balance, we have to do credit. So prepaid expense account debit to expense. minus from the expense, and it will be appearing an asset because we have paid the expense. The benefit is yet to be received. Pre-receive income. It is an income of next year which we have received in current year. Income is of next year received in current year. So first of all, income is of next year received in current year. So we have to deduct this income. Why, sir? Because it is of next year. So income has credit balance. To decrease the income, you have to debit the account. So income account will be debited and pre-receive income account will be credited minus from the respective income, and it will be appearing as a liability. Come over here. See, expense account debit to outstanding expense, prepaid expense account debit to expense, outstanding income account debit to income, and one more entry we have learned that about income account debit to pre-received income. These are known as adjustment entries. I hope so each and everybody who is watching this lecture has been clear with the adjustment entries. Let's go ahead. Now it has been already discussed in your fundamentals of accounting. Closing entries at the year end, all the nominal accounts will be closed by transfer to which account? Trading account. If there are direct expenses and direct income, it will be transferred to trading account. But if there is a indirect expenses or indirect income, it will be transferred to P&L. For example, the entry for purchase is purchase account debit to cash. Over here, purchase account debit to cash. Purchase is a nominal account. It will be having which balance? Debit balance. So what entry we can pass? Trading account debit. Just give me a second. Yes. तो हम लोग यहाँ पे so we were on the point of what? Closing entries for nominal account. So first of all, the entry for purchase is purchase account debit to cash. Now in purchase, it has which balance? Debit balance. For reducing the debit balance, you have to credit the account. So the account you will be debiting, that is trading account debit to purchase. See over here, trading account debit to opening stock to purchase to direct expenses. It means that all the items appearing on the debit side, the entry will be what? Trading account debit to opening stock to purchase to direct expenses. Similarly, the entry for sales is what? Cash account debit to sales. Entry for sales is what? Cash account debit to sales. Cash account debit to sales. Now over here, sales have which balance? Credit balance. And for reducing the credit balance, you have to debit the account. So sales account debit to trading. See over here. The entry is what? Sales account debit, closing stock account debit to trading. These are all the which entries? Closing entries. First of all, trading account debit to opening stock to purchase to direct expenses. Sales account debit, closing stock account debit to trading. Now, for recording gross profit, what entry you will be recording? Trading account debit to P&L. Sir, why trading account debit to P&L? Sir, explain us. See over here. Whenever you write to GP over here, so what entry you pass? Gross profit is an income for you. So entry you will be recording will be trading account debit to GP. Trading account debit to what? Gross profit. Now, very important. For transferring this nominal account to which account? P&L, because gross profit is an income. Income is a which account? Nominal account. For transferring it to which account? P&L. So what entry you will be passing? GP account debit to P&L. Now, gross profit cut. So what entry is pending? Trading account debit to P&L. Over here, the same entry is written. Gross profit account debit to what? P&L. Similarly for gross loss is an expense. So entry you will be recording at the first time. Gross loss account debit to trading. Now, loss and expense have debit balance. You have to transfer this nominal account at the year end to which account? P&L. So entry you will be passing what? P&L account debit to gross loss. Now gross loss cut. The entry will be what? P&L account debit to trading. Transfer of which loss? Gross loss. So these are the closing entries for which account? Trading account. I hope each and everybody is getting clear with what are the closing entries and why do we write expenses on the debit side and income on the credit side due to closing entries. Let's go ahead. Closing entries only for which account? Nominal account. Closing entries only for which account? Nominal account. So first of all, we have to remember that all the nominal account includes what? Income and expenses. Example, what is the entry for salary? What is the entry for salary? Salary account debit to what? Salary account debit to cash. Now, salary is a which account? Salary is a nominal account. It has which balance? Debit balance. For decreasing that debit balance, you have to credit the account. So what entry you will be writing? P&L account debit to salary. Because expense have debit balance, for decreasing the debit, you have to do credit. So which account will be debiting? P&L. So P&L account debit to all indirect expenses. It will be including salary, rent, electricity, printing, stationery, etc., etc. Now, in case of indirect income, for example, if we receive interest or if we receive rent, so what entry will be passing? Interest is an income, cash account debit to interest received. Cash account debit to interest received. Now, interest received is a which account? Interest received is a nominal account. In nominal account, what you have to remember? You will be always having two things, income as well as expense. So it is an income. Income will have which balance? Credit balance. For decreasing the credit, you have to debit the account. So interest received account debit to P&L. That is indirect income account debit to what? P&L. Very, very, very simple. P&L account debit to expenses for all the indirect expenses, and indirect income account debit to P&L for all the indirect income. Now let's go ahead. For net profit and net loss, net profit is an income. So if it is an income, what entry will be passing? To net profit. P&L account debit to net profit, and again it is a nominal account. Now this net profit will be transferred to the capital account. Capital having always and always credit balance, it will be increasing the capital. So you have to increase the capital. So you have to do to capital. And which account will be debited? Net profit, because it is a nominal account. Net profit account debit to capital over here. Net profit cut. P&L account debit to capital for transfer of net profit. If it is a net loss, the entry will be reverse. Capital account debit to P&L. Very, very, very simple. All these closing entries will be helping you for the posting purpose, and you will be getting more clarity that how to record the transaction in a trading account as well as in a profit and loss account. Important adjustment while preparing final accounts. Sir, what are the important adjustments while preparing final account? The first most important adjustment, that is closing stock. If the closing stock is appearing in the trial balance, it is already adjusted against purchase. If closing stock is appearing in the trial balance, it is already adjusted against purchase. Closing stock account debit to purchase, the entry have been already recorded. Only one effect is to be made. It will be in the balance sheet asset side. Many students, what they do, they will be seeing closing stock and they will be writing two effect. First one is in the trading account, and second one is in the P&L account, balance sheet, trading as well as balance sheet. But If the closing stock is appearing in trial balance, it is already adjusted against purchase. Only one entry will be, one effect will be given, that is, it will be appearing in the balance sheet asset side. First one is done. Second, closing stock is not appearing in trial balance. If the closing stock is not appearing in trial balance, it will be having two effects. First, trading account credit side. Second, balance sheet asset side. If it is not appearing in trial balance, it is giving it as an adjustment. If closing stock is not appearing in the trial balance, it will be giving, it has been given as an adjustment. So two effect will be that trading account credit side, balance sheet asset side. Important note, closing stock is recorded due to which concept? Matching concept. Very, very, very important. Closing stock is recorded due to matching concept. And matching concept, match the current year revenue with the current year expenses. We all know that. What does matching concept tell us? You have to match the current year revenue with the current year expenses. Closing stock is always valued at which price? Cost price or market price, whichever is less, due to concept of conservatism. Very, very, very important. Closing stock is always and always valued at market price or cost price, whichever is less, as per the concept of conservatism. Closing stock is recorded due to which concept? Matching concept. It can be come in the exam as an MCQ, or it can be asked for the intermediate student as a theory question. And closing stock is always recorded at cost price or market price, whichever is less, as per the concept of conservatism. We have already discussed the large chart. There are 4 items: outstanding expense, prepaid expense, outstanding income, and pre-received income. Both the outstanding one will be added in the respective expense and respective income, and both the prepaid will be deducted from the respective expense and respective income. Outstanding expense will be appear as a liability, outstanding income will be appear as an asset, and prepaid expense will be appearing as an asset, and pre-received will be liabilities. These are the 3 important adjustments. Let's go ahead. Depreciation. You have already studied the topic of depreciation. In case of depreciation, you must having 2 effects. The first effect will be deduct from the value of the asset. The second will be debit to which account? P&L. If, sir, the depreciation is already appearing in the trial balance, then what to do? Be with me at the end of the lecture. I will be telling you what is the treatment of the same. Did not worry. We will be discussing if depreciation is already appearing in the trial balance, what we can do. I will be telling you what are the adjustments which we can make, if there are additions, if there are no additions, if the book value has been changed, everything we will be discussing. So depreciation, for now you have to remember 2 cases. Deduct from the value of the asset. Second, debit to which account? P&L. For bad debts and provision for bad debts. Debtors, you have to deduct new bad debts. I have written in the column that there are new bad debts, not old bad debts. Only new bad debts will be deducted. New discount will be deducted. It means that bad debts which are appearing in trial balance will be not deducted over here. Bad debts which are appearing in the adjustment will be deducted over here. Provision for debts, that is RDD, reserve for doubtful debts. This we create due to concept of conservatism. It is anticipate future loss which we have recorded now. Provision for discount. If we are giving some discount to our debtors at the future date, so we have to record provision for discount. So these are the 4 things. Debtors minus what? Bad debts, less discount, less provision for bad debts, less provision for discount. You must have followed the sequence. It is very, very important. First, minus new bad debts, not old bad debts. Second, minus new discount, not old discount. The discount which is appearing in the trial balance will not be deducted over here. It is already been deducted. Then you have to deduct new RDD, that is appearing in the adjustment. Then afterwards you have to calculate provision for discount. Provision for discount, it means that you are creating some provision that you will be giving to your debtors a discount at a future date. When we create provision, entry will be what? P&L account debit to provision for bad debts, because it is an reducing the profit. Why we are reducing the profit? Because these are the anticipated loss which can be occur in future. Bad debts, if bad debts, these are the confirmed loss, it is an expense or loss for the business. So what entry will be passing? Bad debts account debit to debtors, directly deduct the value from the assets. If bad debts appear in trial balance, then show as a loss in P&L only. Important. Sir, what if bad debts is appearing in the trial balance? Just show it as a loss in the profit and loss only. No effect in the balance sheet if bad debts is appearing in the trial balance. So here we have completed the bad debts and provision for bad debts. First of all, the sequence is debtors minus bad debts minus discount minus provision for doubtful debts and less provision for discount on debtors. When we create provision, what entry will be recording? Profit and loss account debit to provision for bad debts. That will be reducing the profit. Bad debts further will be what entry? Bad debts account debit to what? Debtors. So these are the entries which we have to record. If bad debts is appearing in the trial balance, it will be show as a loss in the which account? P&L account. Now let's go ahead. The next adjustment is very important. The name of the adjustment is loss due to fire. Many times what happen? There is loss in the business due to fire. So how to deal with that? Many times what happen? There is loss in the business due to fire. At that case, what will be the entry? Abnormal loss due to fire. For example, assume loss is 10 lakhs. So we have lost our goods of rupees 10 lakhs. So what we can do? Either we can deduct it from the purchases or we can show on the credit side of trading account. We have already discussed this point at the time of learning of trading account. Either you can minus it from the purchase or you can show it on the trading account credit side. So entry will be what? Loss by fire account debit to purchase or trading. For example, the loss is of 10 lakh and the insurance company is agree and accepted the claim of 8 lakhs. So how much loss I have been incurred? 10 lakh rupees. And insurance company has accepted a claim of how much? 8 lakh rupees. So over here very important. 10 lakh rupees is the loss. 8 lakh has been accepted by the insurance company. So my net loss will be 2 lakhs. So it will be having three effects. First, the goods have gone of 10 lakhs. It will be appearing on the trading account credit side 10 lakhs. The insurance company has accepted a claim of 8 lakhs which is yet to be received. So insurance claim receivable will be your asset because the claim has been not yet received. It has been receivable. And the third important thing, 10 lakh goods has been lost. 8 lakh has been accepted. 2 lakh will be my loss. That will be appearing in my profit and loss as loss by fire. So loss by fire or abnormal loss, if the insurance claim is accepted, it will be having three effects. Insurance company account debit are 8 lakhs, P&L account debit 2 lakhs, to loss by fire 10 lakhs. So very important. In case of loss of fire, it will be having three effects. First of all, trading account credit side with the amount of goods lost by fire. Second, P&L, the amount of actual loss, that is loss by fire less insurance claim. Third, insurance claim receivable in the balance sheet asset side. Very simple. Abnormal loss due to fire. I hope each and everybody has been clear with this. Now let's go ahead with the another one, that is drawings. Drawings is treated because of which concept? A concept known as separate entity concept. Sir, you don't teach a separate entity concept, but I have already already explain you what do you mean by separate entity concept. Separate entity concept means what? Owner and business are two separate persons. Show drawings as a deduction from capital in the balance sheet. It means that you have to deduct the drawings amount from the capital which is appearing in the balance sheet, because drawings are the personal expense of the owner and it is not the business expense. Due to separate entity concept or business entity concept, owner and business are two separate persons. So show drawings as a deduction from capital in the balance sheet and reduce cash and bank if owner has withdraw cash, but reduce it from purchase if goods are withdrawn. Many times what happen? Owner has withdrawn cash from the business. At that time, you have to deduct the amount of drawings from the cash or bank balance. If the owner has withdrawn the money from the bank, reduce the bank balance. If the owner has withdrawn the money from the business cash, so reduce the cash balance. If the owner has withdrawn the goods for this personal use, then deduct it from the amount of purchase. Show drawings as a deduction from capital. Reduce cash and bank balance if owner withdraws cash, but reduce it from the purchase account if goods has been withdrawn. Important note: if drawings account appear in the trial balance, then show as a deduction from the capital. For example, in balance sheet, LIC and income tax are also treated as drawings. Very, very, very important. Very, very, very important. LIC, life insurance policy, that is life insurance corporation, the full form of LIC, and income tax are treated as a drawings. These are owner's personal expense and not business expenditure. So over here, drawings deduct from the value of capital which is appearing in the balance sheet. If it has been withdrawn cash, deduct it from the cash. Bank, deduct it from bank. If goods has been withdrawn, deduct it from the purchase, or either you can show it on the what? Trading account credit side. Let's go ahead. Advertisement, goods distributed as with sample, free sample. So whenever the goods are distributed as free sample, what two effects we have to do? First of all, show advertisement expense in the P&L, because it is a type of indirect expenses. We are distributing goods, but for which purpose? Selling purpose, advertisement purpose. So it will be appearing in the P&L, and the goods has been distributed, so goods are going out. I have told you that if the goods are being going out, credit which account? Trading account, or it can be reduced it from the purchase. So advertisement as an expense in P&L, and second effect, reduce it from the purchase account or trading account credit side, or trading account credit side. 7, adjustment. Advertisement, goods distributed as with sample, free sample. The next one is what? Sale of goods on approval basis recorded as actual sales. Very, very, very important. It will be taking approximately 4 to 5 minutes for explanation. Kindly listen it very, very, very carefully. Sale of goods on approval recorded as actual sales. What happened? The accountant has recorded the goods which we have sold on approval basis as an actual sales. So we are not getting it. Please wait. Very, very, very important adjustment. It will be having 4 effects. I have given you the goods. These are new goods. You are not ready to purchase it. I am convincing you. I have tell you that, sir, you take the goods, don't pay me the money. If you are satisfied with the goods, after 1 month, you can pay me the money. So it is what? Sale of goods on approval basis. I have given you the goods, but you have not yet confirmed me that you want to purchase the goods. It has been 1 month and my accountant has recorded this sale as an actual sale. It is not an actual sale because it is very uncertain. Na? You can give me the goods back again. So at that time, if you have recorded it as an actual sales, reduce it from the sales and debtors. The first effect, you have recorded is actual sales. These are not actual sales. reduce it from sales, reduce it from the debtors, show in the credit side of trading account. Show in the what? Credit side of trading account, closing stock and balance sheet. Because this is the stock which is available with the customer. Just the possession has been transferred. Ownership is with the seller only. I have given you the goods. You are the buyer, but the possession has been transferred, but ownership has not been transferred. Ownership will be transferred when you give me the confirmation. So there will be total 4 effects. Deduct it from the sales and debtors, show it on the credit side of trading account and balance sheet, add in the closing stock of trading account, add in the closing stock of balance sheet. So sale of goods on approval basis recorded as actual sales will be having 4 effects. First, reduce it from the sales and debtors. Second, show in the credit side of trading account, add in the closing stock which is appearing in the trading account as well as in the balance sheet. So these are the total 8 adjustments which are as in your final accounts. Then we have what? Opening entries, only real and personal account. Opening entries only real and which account? Personal account. Very, very, very important. Just give me a second. Yes. So opening entries, real and personal account, I will be covering in the next lecture. So do not worry. Opening entries and the marshalling of balance sheet will be taken care in the next lecture, and we will be also solving the MCQs, and we are then completed with the chapter of final accounts. So till then, everyone keep studying. Bye bye.